And some on Wall Street said the dollar's decline is far from over, including strategists at Morgan Stanley. They say the probability of a dollar depreciation in the next year is the highest it's been in decades. Now, what does this mean for U.S. companies? Caitlin Long also works at Morgan Stanley, but she is not in the currency forecasting business. As a managing director in the corporate strategy group, she advises companies on macroeconomic developments and concerns, so she is well positioned, shall we say, to answer that question for us. We look at the dollar, we look at the decline. We've already seen quite a sort of stealth depreciation this year, if you want to call it that. But what if the trend continues? What is the impact for companies?
The impact for companies, in particular for companies that are either in the export or import business, is more volatility in earnings, particularly for companies that are not used to hedging that exposure. And in general, the structure of the U.S. economy is very focused on the relative value of the currency, and over time big currency changes could have big impacts on the relative contribution of, say, the manufacturing sectors versus the service sectors. Okay,
so let's say you're a corporate treasurer, and for those corporate treasurers out there, listen up. How do you deal with this situation? You've got cash on your balance sheet. I actually took a look at the S&P 500 cash and near cash items. They total more than $1 trillion. Now, not all of that is in dollars, but you'd have to imagine that given these are U.S. companies, a lot of it is in dollars. What do these treasurers do?
Well, I think for the treasurers that have non-U.S. businesses, the most important area to focus is hedging the dollar currency fluctuations relative to other currencies. But the other interesting question in this environment is the relative purchasing power of currencies relative to real assets. What we're seeing is food and energy prices going up, similar to the period of time in 2005 to 2008, when China's yuan revalued up against the dollar. You saw commodity prices increase. We're going back to a similar increase in commodity prices, in part as a function of just how much paper money the global central banks have been printing in this environment.
We just heard, in fact, from Nouriel Roubini saying that he thinks commodity prices are going to continue increasing. Now, you did raise the point of China, so let's think about that. We've heard from China demanding a new world reserve currency. Whether it's going to be the yuan, probably not, or something else, remains to be seen. But let's also take a look at something that you considered, which is the cost and benefit analysis to U.S. companies of the U.S. dollar as the reserve currency. What did you find? Let's start with the benefits.
The benefits, very clearly the biggest benefit has been lower interest rates. U.S. companies and the U.S. government have been able to borrow at cheaper interest rates as a result of the dollar status as a reserve currency. And this has been true essentially since World War II.
Okay, now we're running through some of the benefits here. Higher domestic spending, lower volatility and materials costs among them. What about the costs? Because having the dollar as the world's reserve currency isn't always a bowl full of cherries.
That's right. I think the biggest cost is that it's been very pro-cyclical. Booms and busts, in effect, have been fomented by changes in foreign currency reserves. We saw that very clearly in the buildup of Fannie Mae and Freddie Mac securities from the 2002 to 2008 period of time, when global central banks were buying these mortgage-backed securities, and of course that helped foment the housing boom here in the U.S. In the past, when central banks have liquidated their dollar reserves, that's had a downdraft effect on the market. And so far, we haven't seen liquidations of those dollar reserves, but it's certainly something that everybody's watching.
So far being the key qualifier. For that reason, and also for what you were saying before, the possibility of a decline, a good idea, in your opinion, for companies to diversify their cash holdings into a number of different currencies, correct?
Well, that's an interesting question, and certainly every company's in a different situation. But what we've talked to our clients about is the probability or the possibility, the scenario over the next, say, 5 years, that they wake up one day and the dollar is not worth what it was. For example, we can use the UK pound when it fell out of the European exchange rate mechanism in 1992 and devalued in one day by 12%.
But should we expect that to happen with the dollar?
We're not forecasting that, to be clear. We're not forecasting that. The forecast has roughly a 7% continued depreciation in the dollar between now and the end of 2010. So that's clearly not the forecast. But when we talk to our corporate clients, we tend to use a longer period of time and tend to talk to them about scenario planning.
Well, one thing that I found, you know what, we don't have enough time, I'm afraid. Caitlin, we'll have to continue our conversation. Great to have you here. Caitlin Long, Managing Director at Morgan Stanley in the Corporate Strategy Group.